All right, I'm gonna come on in just a second. Let me know if you can hear me, see me, if you like this. I'm just coming on with some, it's just like a Wednesday night talk. I'm feeling all cozy with the time change. It's just time for a little chat. And on some level, I should probably stop using the word trash, but I really can't think of any other way to say it because it really is, and no one should be pushing this stuff. And they shouldn't be trying to peddle you or get your money for this, and they are, and enough is enough. So we need to talk about this. All right, we got a few people. If you can hear me on YouTube, I'm doing this from a new location. Okay, good. Thank you guys. All right. Hey, so I'm just gonna come on. You guys, if you have any questions, you can go ahead and post it. Um, this is my new home office. It's not really done yet, but it will be, and I'll have like a nice, pretty photo or something or a painting back there that I get off Facebook or something, and some bookcases. But for right now, I just barely got the boxes unpacked. So, but I can sit down in a chair. I'm not on the floor. I'm not on a pillow. So, oh, thanks, Big Willie. Checking in, keep teaching. Will do. I just got $5 from Willie. I like that. I'm gonna do this more often. Okay, so make sure you toss a question out too, Willie, when you can. All right, so let's talk about this. And you may or may not know this, but if you are keeping up with a lot of real estate investing talk, you are going to eventually see someone promote self-directed IRAs. And I've had that as well as other items that I use to invest with in my investing career. And there were absolutely, positively no benefits whatsoever to a self directed IRA over what you can get with the solo 401k. So even if you didn't have the 401k, the self directed IRA sounds really good, but there are alternatives that are cheaper and you have a lot more control. And you don't have to pay a custodian every single time you sneeze when you want to get something done. So let's go over what this is and who's pushing it, okay? So in general, in the real estate investing world, if you go to any online forum or if you go to any seminar, someone's going to be there in their big fancy suits and they're going to be saying, hey, we do self-directed IRAs. Use your retirement income. Use your 401k to invest in real estate. And I really need to give you the backstory around that, okay? So in general, say you have a lot of money in your IRA, right? A Roth IRA or, traditional IRA. They're saying that a self-directed IRA is that you can, use the funds, roll over those funds into this fund, and then use that money instead of keeping it with Fidelity, where you only have stocks and investments to go, or with Vanguard, you can roll it here and have the ability to buy whatever you want because it's a self-directed IRA and they call it with checkbook control. So your current place that you have a 401 or IRA and your fidelities and whatnot, unless they start to branch out, for the most part, it's just stocks. But some of us out there really do not care for stocks. We just don't. I know I buy stocks, but I buy selective stocks. I buy like marijuana stocks. It's just things that you're just not going to see on those main funds, and we just all of our money, we want them to work a little bit better and a little bit smarter for us, right? And so the idea is very sexy. Okay, let me take this out. I've been saving with my Roth IRA, and they're honestly, let me be real clear, they're not going to say it, but they're really talking to people who are 60s and 50s who've been saving for 40, 50 years and have substantial amounts in their IRAs. Maybe they have 100,000, 200, 300,000, 400, even more, 700,000. So they're really targeting those people. And the idea of taking out of these, dumb mutual funds that are investing in the same 30 companies that everyone else is investing in, like, why don't we really have something that makes it work for us, like real estate investing? So they can roll it over into this and you have checkbook control. So that means you can write a check and go, hey, like, I have control over what's going on. And it sounds really good in theory, but it really starts to fall apart, especially when you have a solo 401k that you can get, which can also use your retirement funds, but it has a lot more freedom. So that's why it's sexy. And people who are in their 50s and 60s who've been saving a long time, they find it like really amazing. I wasn't in my 50s and 60s. I was like 29 when I got my first, but I just like the idea of controlling it. I didn't really like the idea of those mutual funds and stocks for my money. I'm just like, I don't trust y'all people. Read between the lines. I don't trust you people with my money, right? I just don't. Because I always get the short end of the stick because I'm not part of the top 1%. The top, the bottom 99 always gets shafted. I'm just not, I just don't want to be a part of your system. Okay, so I did it when I was young, but just to see what it was like, so I can take, even if I had 5,000, that's my 5,000, my $10,000 that I had in an IRA that I can use, right? For real estate investing. So let me set this up for you real quick. So if you have that much money, you got to understand that there's still caveats, but I don't like it for two reasons. One, it's really hard to get a loan with your SD IRA. Sometimes I think they'll take your money as collateral. So if you have $80,000 in there, they'll take like that's collateral and they'll loan you $80,000 to get like a property. And you can get two properties or a nice little duplex with that, right? So in general, it's harder to get a loan. So that's something to really can take into account. And you really are paying cash for these properties. So you just have a lot of money saved up. And that sounds okay, but just understand and this doesn't even get into the infrastructure of it. It's just like what they're selling you on. And you have to understand you're not even allowed to really take that money. So if you take your traditional IRA and you roll it under into a self-directed IRA, you still have to be very cautious that you're not, what's it called? You're not taking the funds out because then you're going to be taxed on it. If it's a Roth IRA, you're already taxed. And so it's just, you got to be careful because if you take the money out, versus if you leave the money in, there's a tax implication. So if you leave the money in, you just bought something with your investment, but you really can't touch the money. And a lot of the people who are investing in real estate are doing this for financial freedom, not necessarily to have the accumulation of money in 30 years. So it's always something to be very cautious of because you really need to read the rules on if you can even take that money out. Right? So if you're making $2,000 in cash flow, that's really good that it's in your 401, your IRA account. But if you really can't touch it because of tax implications and liabilities, really be sure about what you're trying to do here. The other thing is that the structure of it is if you get a self-directed IRA, the way it's structured, you need a custodian. So you need a place like I used at the time, SunWest Trust, not an endorsement. Obviously, I don't like my IRA anymore. So, they weren't a bad company. But the way that it is set up, they were one of the cheapest. So there's a fee for everything with an IRA. So not only especially with adjusted gross income, not only do you not get that much of a tax deduction for contributing to an IRA, depending on how much you make and if you're married, you get absolutely no deductions for any contributions, which is whack. That's why you have a retirement account to get a tax deduction on your total income so you're not paying as much in personal income taxes, right? But with IRAs, unlike other forms of retirement accounts, they started to capping it with like the adjusted gross income they have. When what was the name of that when it was like you're married? They have like the minimum adjusted gross income. If you guys know that term, tell me. For some reason, it just slipped my mind. Do you guys know what I'm talking about? What is it like the minimum adjusted gross income, modified adjusted gross income? So basically, they said if you're married or even if you're not, if you make over $60,000, any contributions you make to your IRA isn't even deductible. So and that's a lot of people. So you're taking away one of the main benefits of a retirement account in an IRA. So IRAs aren't even that good or competitive as far as a really structurally sound instrument in the first place. Okay, someone trying to talk to me in the middle of a live. Okay. I'm just making sure he doesn't want to tell me something like there's a booger in my nose or something. Okay. No, it was nothing. So in general, they're not the best anyways because they're not even that good for tax deductions. And the way that it's structured, if you want your own self-directed IRA, you need a custodian. The custodian charges for everything. If I wanted to open a bank account, I give them $75 for them to say, okay, you can do it. And you're just like, hey, I want to switch this bank account. Can you say okay? And it's supposed to be a way of them having checks and balance on you. But every time you do something, you have to pay 75, 300, $150. It gets really old really quick. So there were things that I wasn't even doing with it because I just didn't want to pay $150 or $300 fee to you to be able to purchase this or invest in that or to get this or to get a credit card in the IRA's name as a trust. So it was complete garbage like the whole time. Every time you turned around or sneezed, you had to pay them. I didn't get any tax deductions. And I really couldn't use it the way I wanted to use it because it's like you have to keep the money in there. And it was just a bit of a mess. And so now here are the alternatives. Like I don't call things trash unless it's like there's so many better options, and there really are. So the better options that are out there is a solo 401k. So they call it solo 401k when you are self-employed and you don't have IBM giving you a retirement fund. Well, so for all the thousands or millions of people who are self-employed, you can create your own 401k through the company. Now, it needs to be written up properly. It needs to have the right legalese and documentation. You need to manage it correctly, but it's very minimal guide. Just keep track of what goes in. Make sure you account for any distributions or withdrawals. And outside of that, you can take loans against it and repay it back at your discretion. You can roll over previous 401ks with other employers into it. You can deduct if you're married and you're both on that 401k as a combined unit filing jointly. You can deduct up to $53,000. They allocate enough, $18,000 each for your own individual paychecks, plus up to 20% of the profits of your business every single year. And this has nothing to do with your adjusted gross. This is just what you're allowed to do. So it automatically blows that self-directed IRA out of the ballpark because it doesn't matter what your income is. You get to deduct. If you make an elective contribution, an elective contribution means you get a salary and you elect, they automatically take whatever, $1,500 and put it into the account every single month. So you automatically get that up to $53,000. It might have been 55, you let me know, but $53,000 deductions every single year. I had my self-directed IRA with checkbook control for about 2 years, and it was just garbage, so I got rid of it. I've had my self-directed IRA for about 6. Right, and it's the gift that keeps on giving. So at the end of the year, before like March 30, there's a timeline, like March 31st, I can still contribute to it, and I can add up the profits of the business, and then up to 20%, I can go ahead and contribute to that, and that's a major tax saving deductions that goes to my 401k. That's pretty major. And not only that, so not only can you roll things under it, and it has such a huge deductible rate, you also have full control. It's not like you don't need a custodian. You are literally the person in charge. Your reporting standards are any withdrawals. And if your 401k has over $255,000 in assets, then you have to once a year during tax season, there's like this form you send to the IRS saying this is how much it is. They do not care about you until it's $255,000. I mean, this is like literally the most minimum, the most minimum thing you can do to like report. So it's very, very, very easy to run and manage. And you can do real estate investing. You can do American Gold Eagles or, and silver. So if you wanted to invest in gold, you just have to keep it in an FDIC insured depository, which I invest in gold, and then I have it in a safe deposit box at the bank. So you can invest in gold, real estate. You can invest in anything, not collectibles or antiques, which are, you know what I mean? Those are more storage of wealth versus like an actual investment. But basically outside of like the prohibitive items, which are like antiques, antique cars, collectible stamps, outside of those things, you can literally invest in anything. You, you can invest in a horse racing farm or a business. You can invest in, you can give out promissory notes. So I loaned from a 401k. I created a promissory note to a family member who was like not on the prohibited list. They don't want you doing business with your mom or your kids or your husband, right? But outside of that, your sisters and cousins, you can. They needed some money. We wrote up a document, a promissory note. I withdrew it from my 401k. They paid the interest on it, which was 5%. I got it back. It went back into my account. We've done that a few times. You actually can become a nice little bank and make whatever interest rates you want. You can do whatever you want as long as it's legal and it confirms to the rules. There literally are not that many rules. They just haven't made a ton, and not that they needed to. So I like it because I like investing in gold and lending out promissory notes and being able to have that full control. I don't have to pay anybody to do it, and I get up to $18,500 of whatever is my earned income and my salary, or whatever I take from my salary, plus up to 20% of the profits from my self-employed business. So if you're a real estate investor, your investing business, right? Because that's how it started with my investing business 6 years ago. You can deduct up to 20% and shelter some of those profits. Like I don't even know why I would look at self-directed IRA. I started them both at the same time, and it was just so clear. That's why when I was working with a client in New York last week, and he was saying that they were talking to him about using his IRA to get a self-directed IRA, and I was just like, no, trash. They're still trying to sell this thing. There's absolutely no comparison. They're night and day. They're not even in the same league, so do not do it. I hope this was clear. About the why, but the practicality of it is that it is complete trash compared to all the benefits you get to something else. Now, setting these things up can be a little interesting. So you can get a 401k, but I remember when a solo 401k, but I remember when I called around to 5 companies. I got to set it up and do the paperwork and have a lawyer do the paperwork so that it's legal and binding. It is anywhere from $700 to $3,000, right? So they'll charge you a lot for the thing. You'll just have to keep asking around. The guy that I got my solo 401k with 6 years ago and he's still in business. His name is Mark Nolan. If you go to Bigger Pockets, he posts about it. I really like his company. Him and the legal team, if you have questions, they're really good at answering. They don't charge you for it. And at the time, he charged $700. I think it's $800 now, but it was the best $800 I've ever invested in my entire life. I'm dead serious about that. Like, my solo 401k is like the business. I invest in stocks with it. I invest in cryptocurrency with it. Like, and you have full control. You just need to make sure you're doing it by the book, and you make sure you don't do the IRS prohibit. So gold, crypto, stocks, marijuana stocks, like on E-Trade. And you can do real estate investing and have a lot more control. Now, always remember, if you do real estate investing and you buy a house with your 401k funds, that you will have to keep whatever rent or cash flow you get, you have to keep in that account. If you withdraw it, you have to withdraw it and take the penalty, right? So in some cases, I'm just like, if you have this 401k, if you need to just withdraw $10,000 and take $1,000 penalty, go ahead and do it. As I said, when you invest in property and you have to fix it up, you get so many deductions that $1,000 liability just disappears, right? Just because, it's like you're supposed to pay, but then as your adjusted gross income goes down, it disappears just like your other liability or tax liability does, right? So just always keep that in mind. Sometimes it's just best to just take, but just in general, even if you're not doing real estate, it is best to go with a solo 401k. You can get Mark at mysolo401k.net, and just let him know Lisa sent you. I think he might give you $50 off or something. I don't get anything, so, but you might, right? Or just ask about it. But he was the cheapest that I found, and they're actually really cool because when I was trying to get a bank account, because when you're listed on this, it's a trust, And so he would actually get on the phone with the bankers because some banks, like Bank of America, they're like, we don't do trust. It needs to be a $500,000 trust. PNC was like that as well. But then a smaller bank was able to will and deal a little bit more. And he literally got on the phone with her at the bank office because he's like, let me get on the phone because it's easier. And he's like, and then he just lays it out. This is what it is. Don't worry. Don't trip. And so that one-on-one support is actually really cool. You don't always get that. So who hung up me? I know this isn't the most exciting topic, but the solo 401k is like the business. Y'all all need it. You like it's amazing. I've had it for 6 years. It keeps growing and growing and growing. It is such a tax shelter. It's legit. It's legal. It's amazing. Up to 53,000 a year if you're married. So it's real cool. So do you have any questions? Hey Arthur and okay, got you. Hit that like button. Rod says there are also no fee, no load index stocks. Stocks are a long play. That is correct. They are. Yeah, and like I said, I know personally there might be some people like me. I just don't like playing their game. All right, it's just we always come out on top. I gotta do something real quick before my computer turns off. Oh, okay. There we go. There we go. Oh, right. I've never heard of this, but it sounds great. I will research it. Yeah, if you go to any seminar, they're really going to be pushing it. Self-directed IRAs are trash. No one should be pushing them at this point. Like, no one. If you are, I'm looking at you like you think we don't know. And solo 401ks are the business, man. I mean, you can invest in horse farms or businesses that, are you can invest in businesses, right? You can do promissory notes in addition to real estate without having to pay anyone to do it. You just keep track of it and make sure it's legal. Like, look, if you ever get audited and your stuff's not on point, and it's really easy to stay on point, and it's not, you can be fined a penalty for whatever your transaction is, but they really make it easy and very minimal for you to stay in compliance without having to worry about that. So anybody on Facebook world have any questions? I always like when my the people on my Facebook profile watches because it's like it's not like YouTube where you're going for real estate investing. They're just random people who are on my Facebook. So I always find it interesting who tunes in. Anything else? Anybody else? No questions before I head on out? Yeah, it's Wednesday night. It's 9:30. It's late, right? With this time change, I feel like going to sleep like right now. But yeah, I hope this was informative. I hope this was helpful. I'm not seeing any questions, so I'm going to log out. And yes, let me go ahead and write my solo 401k.net. I'm going to write this here, and I'm going to write this here in the comments if you are interested. So if you have any type of business, I don't care if you sell candles, you can get a solo 401k. And when I'm talking about, so say you make no earned income, so you don't have elective contributions. Well, if you make $12,000, $20,000 in profit for the year, up to 20%, you can go ahead and deduct and put in your 401k. So I honestly, my solo 401k is like, that's a really big saving. So let me go ahead and put this up here in Facebook so people have the link. And outside of that, my book, Investing in Rental Properties for Beginners, I am in the process of doing two things. One, I'm going to try to hit and get my audiobook out in the next 2 weeks. So anybody who'd like to get the audio, you can get it on Audible on Amazon.com. And two, I'm also translating Investing in Rental Properties for Beginners, my best-selling book, into Spanish. I went to Amazon the other day to look at the Spanish section. They were like, Rich Dad, Poor Dad. It was like Padre Rico, Padre Pobre. You know what I mean? And so they had like 3 books in Spanish. So we have 1 million books on investing, and there were like 3 books that were in Spanish, right? Translated. So I'm actually doing that. You can get a copy of the book as it is on my website, affordablerealestateinvestments.com. Just do free book. You just pay the shipping and handling, and you get a free trial membership. And then the other thing is, if you ever want to work with me, I work with people every day all over the country. That's where all these topics really come from, because on Tuesdays I have my coaching calls, and or I'm talking one-on-one with clients and these things are coming up that I thought, we knew how to answer these questions, and I'm finding out the information is not out there. And that's what sparks a lot of some of these talks and conversations. So if you do, you can just go to my website and fill out an application for a strategy session, and we can go into details about what exactly it'll take for you to start investing. Look at how much money you have, look at where you're located, look at what markets are able to travel to or are good markets. Just everything that'll go into looking at properties, looking at everything into buying a real estate investment, because it can be a little intimidating when you have to do it long distance. You've never done it before, and you're not quite sure how much of a renovation project to take on. So I just help and leverage my experience doing it myself, as well as doing it for the last 7 years with people all over the country. All right. I think I got some questions coming in at the last minute. I invest in things through my HSA and IRA, so I can invest in a house through my HSA. Fallout. You need to tell me a little bit more about your HSA. I know I isn't there like a maximum contribution of like $5,000 a year? Like, I like health savings accounts because they roll over every single year. I know I had a HSA and I had $100 left over even though I left the job, and I used that like 3 years later. But yeah, do tell. I'm quite interested. So yeah, I'm gonna log off. Thank you guys. And someone asked me, what do you mean by you people? You rich people, you one percenters, people who don't look like me, who are in charge and are greedy and they profit, where a lot of us get the shaft, but they're shorting. So when I said you people in the stock index, yeah, I don't like being dependent on a system where people like that are continuously making the rules and profiting, where us little people are always on the short end of the stick. Okay. So Arthur asked I got some questions. Arthur, can you transfer a 401k rollover to? Yes, and I did it because when you get laid off, I had my 401k. I rolled over all of those 401ks into my solo 401k. Yes, I did. I did it a couple times. Thanks, Arthur. $3,500 for single. Right. Okay. I didn't know you could invest though your health savings account Fallout. So that's why you gotta talk to people in the community, because you learn things. Let me see if I have any other comments. Okay, yeah, we're good. All right, out there, nice seeing you. Congratulations on your new buy of your new duplex. I'm very happy for you. If you guys join my monthly membership, I have a WhatsApp group, and that's where you'll see quite a few people. Daryl asked before I get off, pension to a solo 1K. Well, not a pension. If you have a 401k through your company, pensions are a whole other things that are controlled by a whole separate entity. But when, say, you quit a job or leave a job, okay, so say you're working with Accenture. I just use consultant firms because I was a consultant, and you leave them, well, you had a 401k with them. So you can roll that 401k into your self-directed IRA. I rolled a couple into my self-directed IRA over the last 6 years. Okay? But a pension, that's like, you're not touching your pension. That is held by some big bosses with some big money. And, no one just touches your pension. But 401ks, yeah, they're definitely able to be rolled over. Okay. Coming all late with the questions, but that's okay. All right, I'll talk to you later. I hope that was helpful. If not, maybe next time. See ya.